factor determining working capital requirement. It means suppose we have to plan about the working capital requirement of any organization, then what are the factors which are responsible for the quantity of working capital? So these are the factors. Number one, basic nature of business. Number two, business cycle fluctuation. Number three, seasonal operation. Number four, market competitiveness. Number five, credit policy. And number six, supply conditions. Now, let's talk about the basic nature of business. As you know, we have three types of the business organization according to nature. Number one is trading organization. So if you are running a business and the business is a trading concern. Trading concern means where you purchase the goods and without any modification you are selling it. Then it means it's a trading organization. For example, you purchase a furniture of rupees 5 lakh and you are selling at rupees 6 lakh. Then it means without modification you are selling the furniture, so you are doing trading business. Second type of business is manufacturing concern. In manufacturing you have to purchase raw material and after processing you have to convert it into the finished goods. For example, you purchase flour and you convert it into biscuit, bread and namkeen and other things. Same time you purchased a plastic and you convert it into bottle, bucket and mugs and other things. So this is the example of manufacturing concern. And another type of business is the public utility firms. For example, power generation company. For example, telecommunication, infrastructure means roads, bridges, dams, roadways, airways, railways are the example of public utilities. Hospitals are also the example of public utility firm. So first of all, you have to choose business within this category. If you are running a trading concern, then requirement of working capital will be 90% of total funds required in the business. It means if you have 1 crore for a business and you want to run a trading organization, it means you have to put around 90% of 1 crore into working capital and you may spend around 10% of total fund in the form of fixed capital or fixed asset. Second type of business. If you want to run a manufacturing organization in which you purchase a raw material and after processing you are converting it into a finished goods, then your working capital requirement will be 40% or 50% or 60% of total fund requirement. For example, you are running a manufacturing organization and this manufacturing organization require around 10 crore rupees investment. It means you have to put around 4 or 5 or 6 crore in working capital. At the same time, you have to put 6, 5 or 4 crore in the form of fixed asset. Number 3, if it is the case of public utility firms, then you have to put around 10% of total capital fund required in the form of working capital. It means if you are planning about a public utility business and requirement of funds to start this type of business is around 100 crore, then it means you have to put around 90%. It means 90 crore in the form of fixed capital and you have to put only 10% amount in the form of working capital. Now, second point, it is the business cycle fluctuation. Business cycle fluctuation means it may be the scenario of demand, and it may be the time when your product, or you can say economy, in economy the demand of your product is decreasing. So you can say this is the position of boom or recession. When there is a boom in the market, then requirement of working capital increases. But if a recession in the market, then working capital requirement goes down. Why? Because when there is a boom in the market, then demand of your product increases, and when demand of your product increases, then working capital requirement increases as well. For example, your organization is producing 5 lakh units, and for production of 5 lakh units, the raw material required is 5 lakh kg. Now it's a time of boom, and during the period of boom, your demand increases from 5 lakh to 10 lakh. Then raw material will be required around 10 lakh kg for production of 10 lakh units. In that case, requirement of working capital increases because demand of your product is increasing in the market. On the same time, if there is a position of recession, in recession, demand of product normally decreases. Like you were selling around 5 lakh units in normal condition, and suddenly a recession appears in the market. When recession appears in the market, then your demand decreases up to 1 lakh unit. And if your demand decreases up to 1 lakh unit, then it means for production of 1 lakh unit, you require only 1 lakh kg of raw material. So when there is a boom, demand of working capital increases. When there is a season of recession, then demand of working capital decreases. Next point is seasonal operations. Seasonal operation means there is a seasonal variation in demand of working capital because of some special characteristics of your organization, or you can say some special characteristics of the industry where your firm is operating. For example, if you are in the business of soft drink industry, then your demand increases at the time of summers, and at the time of winter your demand decreases because of seasonal operation. Because as you know very well, the demand of soft drinks increases in the summers, so demand of working capital increases. But at the time of winter season, normally individuals do not prefer to take soft drinks. So there is a change in the taste and the preference of the customer because of the change in the weather. So during the winter season, sales goes down, and consequently the demand of working capital goes down. It is because of seasonal operation. So in the organization where seasonal operation is in nature, in that type of the organization, demand increases or decreases according to seasonality in operations. Next one is market competitiveness. Market competitiveness means what is the position of the organization or the company in market. It means how much market share you have. If you are having monopoly, then it means you are taking the advantage of market competitiveness. But if there are number of players in the market, then the bargaining power of buyers increases. So you can say, if you are having monopoly in the market, then there is no need to maintain more and more stock with your organization. And when you have to maintain minimum stock, you can run business with minimum stock, then requirement of working capital is lesser. But if market competitiveness is higher, it means there are number of players in the market, then you have to put more and more stock in your organization, because if a customer has a chance that he come to your organization, he come to your shop and he want to purchase something, but at the same time you don't have the things to deliver on the same time. At the now customer go to another shop, and consequence will be that deal will be finalized in other shop, and the customer will never come to your shop because of alternate available before him. This is the market competitiveness. So in a nutshell, you can say, if number of players in the market is very high, then all players have to maintain more stock with themselves. And what the consequences of keeping more stock is to keep more money in the form of working capital. And if market competitiveness is low, it means you are in the monopoly condition. Then without having more and more stock, you are very comfortably, you are in the position of comfortably run the business. This is the market competitiveness. Next point is credit policy. Credit policy means that a customer come to any organization or any shop to purchase something, but at the same time he don't have sufficient money, and he wants to ready to pay after certain time, and shopkeeper is not ready to give the chance to pay after certain time, then this type of the policy is to be considered as harsh credit policy. Now, in another case, suppose a customer come to a shop and he want to purchase the goods of rupees 1 lakh, but at the same time customer doesn't have rupees 1 lakh in his pocket and he has only rupees 10,000. The customer is ready to pay rupees 10,000 right now, and he's ensuring you, is giving assurance you that after certain time remaining amount will be paid to you. And if you allow to the customer to pay after certain time, this is called liberal credit policy. So I think it's clear. Liberal means when you give a chance to the customer to pay after certain time, or you can say according to convenience of the customer, then it is called liberal credit policy. And if you are not giving the chance to pay customer according to their convenience, then it's a harsh credit policy. What is the effect of credit policy? Simply, as all know, nowadays the business is depend on the credit policy. Normally, the organization having liberal credit policy takes the advantage. If we give the credit to the customer on liberal terms, then our sales increases, our profits increases, everything is good. But on the same time, we have to monitor on the recovery of credit on time. Now, it's clear that if we are having liberal credit policy, we can earn more profit because we can do more sales. So, what will be the impact on the working capital? If you are having a liberal credit policy, then the amount required will be much higher in comparison to harsh credit policy. Because if you are giving credit on liberal terms and conditions to customer, then you have to put more money, you have to stuck more amount in working capital, and if you are not ready to give credit, you are making the transaction of sale on cash basis, then there is no need to give and there is no need to stuck more amount in the form of working capital. So this is the effect of credit policy. And last thing is the supply condition. Supply conditions means for example, you are running a shop, you are a shopkeeper, and you need good, and after giving an order on phone, if it is available within 24 hours, you can say supply condition is better. But if you have goods in short supply and you make a call, you give an order to distributor of the goods, but he could not make it available within 24 hours, it may take the time of 1 week, 2 weeks, 3 weeks, then you can say supply condition is not better. Now, let's take the example. Suppose you are running an organization where supply condition is too good that you need only 24 hours to receive the goods. It means after giving an order on phone, within 24 hours goods is received by you, then what will be the effect? Effect will be in favor. In favor means there will be no need to maintain more stock with the organization, and there will be no need to stock more amount in the form of working capital. Because supply condition is better, whenever you need, you may make a phone call, you may give an order, and within 24 hours, because you can receive it, so there is no need to maintain more stock. Now, another example. For example, you are running a shop, and in this shop, you need some goods, and goods which is purchased and sold by you, you purchase these goods from Pakistan, suppose. Now, there is a condition that sometimes trade is very easy. It's very easy to purchase goods from Pakistan and this type of the country from where we have some sensitive type of relationship. Then sometimes it's very easy to collect the goods from these type of the countries, but sometimes if there is a tension, then trade may be stopped. And if trade may be stopped, then it's not easy for you to purchase the goods from this country. Then what you have to do? It means you have to purchase the goods in bulk, and because you are not very much insured about the supply condition, it means simply you can say supply condition is poor, and because of which you have to maintain more working capital, you have to put more amount of working capital, and this is the effect of supply condition. So in nutshell, if I again repeat, number one, basic nature. Actually, requirement of working capital depend on the nature of the business. It may be 90% of total fund, it may be 50% of total fund, it may be 10% of total fund. It will depend on the nature. If it's trading concern, then 90% of total fund will be kept in working capital. If it's trading, if it is a manufacturing organization, it will be around 50%. And if it is public utility firms, then you have to put only 10%. Number two, it was business cycle fluctuation. It means during the time of recession, requirement of working capital decreases, and the time of boom, requirement of working capital increases. Seasonal operation means during a particular season, demand of working capital increases, and at a particular season, demand of working capital decreases. In this head, I given an example of soft drink industry or ice cream. You know, at the time of summer, the demand of soft drink and ice cream increases, but at the time of winter, there is a decrease in the demand. So because there is a demand increase or decrease, so on the same time, it will be effect on the working capital requirement. Sometimes it increases and sometimes it decreases. It depends on the seasonality of the operations. Number four is the market competitiveness. It means if there are a number of players in the market, then you have to keep more stock with the organization, and if you have to keep more stock with the organization, you have to put more amount in the working capital. But if market competitiveness is low, then there is no need to maintain more stock with the organization, and there is no need to put there is no need to stock the more amount in the form of working capital. Credit policy means if organization is having harsh credit policy, then working capital requirement will be lower. But if organization is following a concept of liberal credit policy, then the organization has to maintain more working capital. Last one is supply condition. Supply condition means if supply condition is better, it means if distributor is able to deliver you goods within 24 hours, supply goods is in good condition, then there is no need to maintain more and more stock. You can purchase the goods according to requirement. But if supply condition is interrupted and supply is not ensured on every moment of the year, then you have to keep more stock within organization, and you have to maintain more safer stock as well. That's why you have to put more amount in working capital requirement. So these were the factors which are responsible for working capital requirement. Now, these are the estimation of working capital. Estimation of working capital. Let's do some numerical questions on which these are some assumptions or these are the factors which we have to keep in our mind whenever we have to solve the working capital problems. Let's start, then it will be easy for you to understand. This is problem. Here it is given that you are required to prepare a statement showing the working capital needed to finance a level of annual activity of 52,000 units of output. The following information is available. Elements of cost are given as follows: raw material rupees 8, direct labor rupees 2, overhead rupees 6, total cost 16, profit 4, Raw material are in stock on average for 4 weeks. Material are in process on an average for 2 weeks. Finished goods are in stock on an average for 6 weeks. Credit allowed to customer 8 weeks. Credit allowed by supplier 4 weeks. Lagging payment of wages 1.5 weeks. It is necessary to hold cash in hand and at bank rupees 75,000. It may be noted that production is carried on evenly during the year and wages and overhead accrue similarly. So this is the problem which we have to solve. Actually, if we read again, then we find that number one, level of activity is 52,000. It means organization is producing 52,000 unit of output. Now, elements of cost. This is a cost sheet. It means total cost of rupees 16 and after charging of profit rupees 4, we are selling at rupees 20. The two information is clear. Now, on the next part, it's given raw material are in stock. It means raw material is in stock for 4 weeks, WIP 2 weeks, finished goods 6 weeks, credit allowed 8 weeks. These are the other information, and you have to estimate net working capital requirement. Now, let's come on the part. Whenever we have to solve this type of the problem, it has a certain structure which we have to follow whenever we have to solve this problem. Let's start. This is solution. First of all, write down inventory. Inventory means stock of raw material, stock of raw material. Next, stock of WIP. Stock of WIP. Then stock of finished goods. Then debtors. Then cash in hand and cash at bank. So inventory is the main head. First of all, inventory means stock of raw material, stock of WIP and stock of finished. What is the meaning of inventory? Sometime in some organization we use this word inventory as a stock. If it is a case of any trading organization, then you can say inventory and the stock are the same thing. But if it is a case of any manufacturing organization, inventory means stock of raw material plus stock of WIP plus stock of finished goods. After that, debtors, cash in hand, cash at bank. When we add all these things, then the total will be current assets. This is total current asset. Total current asset. Write down is A. Total current assets A. Now here we will write the component of current liabilities. In current liabilities we include creditors, outstanding wages, and outstanding expenses. Add it. This is total current liabilities. This is B. Now it's net working capital. Net working capital. A minus B. It will be net working capital. So this is the format which we have to follow in preparation of estimation of working capital requirement. Now here we will have to write down three things. Number one, units into price into time. Units into price into time. So this is the format. Now units means, if we talk about the unit, it's very much clear that units are 52,000 units and time is given in weeks. So first of all, let's take some assumption. Assumption is 1 year means 52 weeks. 1 year means 52 weeks and 1 month means 4 weeks. These are the assumptions which we take to start this type of the problem. Now, first of all, units. Units are 52,000 in a year. So 52,000, first of all, write down 52,000, and if we talk in week, it means 52,000 units mean units means 1000 unit in a week. 1000 unit in a week. 1000 unit in a week. Now, write down units. Units are 1000 into price. Into price. Price is given rupees 8. Multiply by rupees 8. Then time is given 4 week. So write down 1000 into 8 into 4 is equal to 32,000 rupees. Now let's come on the stock of WIP. Stock of WIP means the stock where goods are in intermediate stage. And when goods are in intermediate stage, we assume that raw material has consumed 100%. But in that stage, labor used only 50%. On the same time, overhead is 50%. Overhead is 50%. So we have to assume that we have incurred 100% raw material, 50% direct labor, and 50% overheads. Now,